Hey, what's up, traders? It's Blake from Trade Connect VVS. I also have Smart Money Source as a special guest on today's episode. We're going to be touching on the main differences between a challenge account, which you've seen like FTMO accounts, and then also instant funding, fast scaling accounts like the 5%ers. We also just got to level 2 with the 5%ers that I'll also mention in this video, along with some hidden tips and tricks of how to pass these fast scaling platforms specifically. So if you guys are interested in that, make sure to watch the whole video. Also, there'll be a link in the description below for a 10% instant refund with the 5%ers. That being said, let's go ahead and get started. All right, so I'm here with Smart Money Source, and today we're going to be talking about which is better, the fast scaling instant funding prop firms or traditional challenge style prop firms. These are mainly the FTMO style versus the 5%er style.
Hello, guys. Thank you for having me here, Blake. It's a pleasure. So let's talk about this.
So as a lot of you guys already know, Smart Money Source is an extreme expert in fiat forex trading, which a lot of the fast scaling prop firms, the instant funding prop firms, have you limited to. Not all of them, of course, but a lot of them are going to limit you to certain instruments that they won't let you trade the indices. So I'm definitely much more of an indice trader, while Smart Money Source is an expert when it comes to the traditional fiat forex trading.
Yes, definitely. Smart Money and Wyckoff have a real, very big impact on forex, since there are lots of mechanisms used on forex specifically, as well as other markets, obviously, where you can see the manipulation that they are doing in order to gather orders and expand, looking always for new pools of liquidity in terms of orders. So yeah, definitely forex among other markets are very good for a small money trader.
Smart Money Source and I have been teaming up on a 5%ers account, and I'm gonna go ahead and show you the statistics of that right now. So here we have the account. As you can see here, we have passed this particular account. Here is the graphics, which I really like. 5%ers dashboard, I think is pretty cool. And as you can see, it shows you the distance to max loss, the P&L, equity, all the good stats that you have here. And as you can see, one of the advantages of a fast scaling instant funding prop firm is that they give you a long time in order to hit the profit targets. So it's not something like a challenge where you're limited to 30, or in the fund trader's case, 35 days in order to hit the first target. You have for 5%ers, they give you 6 months in order to hit it, but they will extend you if you're close, if you're doing well, if they can tell you're actually trading on it, they'll give you more time. A lot of other ones also will give you a whole year, or some of them are even infinite amount of time. Just go ahead and try your hardest to hit it. Once you hit it, good job. It really depends on that, and that's really one of the main differences behind this. One of the cons of the fast scaling instant funding prop firm model is that they usually have a relatively small stop out. In this particular case, they have it where it's only 4% max loss from start, whereas you have to make a 7% profit target for this particular type of account in order to pass the first phase 1. So I'll scroll down so we can see the actual trading statistics of how much we entered in what different pairs of the fiat forex market, and I'll let Smart Money Source go ahead and talk about what the main strategies are to take advantage of for these type of funding model.
Well, obviously, as you guys might know, I'm a scalper, so my stop losses are usually between 1 to 5 pips. And the thing with 5%ers is that you have a very low leverage compared to other type of challenges. In this case, it's only 6 leverage, 6 times leverage. So the only issue is that every time I open a trade, I couldn't risk 1%. I usually was able to risk between 0.2, 0.3% per trade. And obviously it takes longer to achieve the target. Well, in my case, it was a very good exercise of patience, trying to achieve that target with such a low leverage, being a scalper. But definitely, if you are an intraday, or maybe better a swing trader, is even better for you, since you don't use so much leverage and you can hold for longer the trades. So in that case, it's ideal. One of the best thing about this type of fast scaling prop firms or challenges is that you have a very long time in order to hit the target. So that helps a lot to your psychology, since you don't have the pressure of achieving that target in a short amount of time, usually 30 calendar days. So in this case, since you don't have that limit, you can hit the target whatever you want. And if you're a profitable trader, you don't need to rush. So this could be a long-term build of a nice and big account, because if you do this throughout 5 or 10 years, you take 6 months to achieve the target or whatever you want to take without rushing it. You can have a very big account up to 1.20 million in this case, which can obviously can make a living of trading with that amount of money without need to rush any type of targets.
Right. So as you can see on this other slide here, we can see that this is the certificate of passing on to level 2. We plan on pretty much using the same strategies going forward. And if anyone is interested in a 10% instant refund, feel free to use this link. That'll also be in the description of this video as well. And as you can see on this community post here, Smart Money Source definitely had a massive impact on this. So he really is the expert when it comes to trading these fiat Forex markets. So let's go ahead and move over to Smart Money Source's screen, and we can look at what's an example of a situation that he'd look at, how he would be trading on these accounts, how it would be different from trading on a challenge account.
So as a scalper, my main goal is to catch between 1 to 5 hour trades, or even more if it is possible, if I'm catching a scalp and an intraday trade. But what I do usually is go to a 15 seconds or 5-second chart and look for trading opportunities using the Wyckoff methodology, mostly combined with some of the more money concepts. For example, here we can clearly see a Wyckoff distribution in this range. This is a clear change of character between this high and this low. Obviously, the change of character is going to indicate that the trend is going to be over and a consolidation is going to start. And if this is happening within a background story of a higher time frame premium level, where we assume my money shorted before, we can assume or we can wait for a confirmation to take a short, since price is going to follow that higher time frame order flow. So, for example, in these scenarios, we have a break of market structure, and from here, price continue going lower, making a nice leg down. This is a typical entry that I will have based on this entire range, which is an order book. And for a refined entry, I will have waited for this, which is another distribution. We can clearly see a change of character here, then an uptrust, and then a break of market structure. So from here, I could have taken a short as well. Just as an example of how I trade using the seconds chart, following the institutional order flow, basically what Smart Money is doing. Are they buying or are they selling?
So how would you take a different trade based off of this if you're trading on a challenge where you have a larger maximum stop loss, you have larger leverage versus an instant funding, fast scaling prop firm?
Basically, on a fast scaling prop firm challenge, since the leverage in this case is much lower, I can't risk 1% on any of these trades because the stop loss is very small and the leverage is simply not enough. So what I do is I place my trade, I risk 1% by increasing my stop loss to hit at least 1% with a maximum leverage that usually is 30 pips or 25 pips or something like that. And then my target is always the same according to my analysis. But the good thing about this is that you don't need to do this exactly. You can actually use your own strategy. Mine is with very tight stop losses. So the good thing is that you can make 1 to 5 hour trades, risking 0.2 or 3%, 0.2 or 0.3% to make 1.5% or 1% of your account in one single move. Of course, ideally, this is better for a swing trader since you will be risking and taking longer term trades. But since this is scalping, you have many opportunities in one single day to take this type of trade. So you can actually pass it really quickly if you know how to use it.
That's another one of a good point. Most of the instant funding, fast scaling prop firms, they usually don't limit you on having a minimum trading days, whereas most challenge or most evaluation style prop firms are going to have that at minimum amount of days. So that will also affect this if you are going to trade such a small amount of times. And realistically, it's pretty much the same ratio. Thanks so much for showing that. It was really interesting to see how you trade differently on a challenge account versus on an instant funding account. One of the biggest things that I think people get wrong in this industry of knowing which one of these is better is they think that the challenge is so much more in your favor to win. Whereas you have the industry standard for challenges is that you make 10% before you lose 10, and then you make 5% more on a verification or phase 2 before losing 10%. That's usually the industry standard. However, it's actually more in your favor slightly if you know how to take advantage of this, if it was combined into one. So if you combine both phases into one phase, it is actually slightly more in your favor if you have just one phase when they're combined. If it's make 15% before losing 10 in the first place, that'll actually be more in your favor to win that. So it's really interesting, this instant funding approach, where essentially is one phase. There is no challenge in the first place. You are instantly funded. You will make a profit split off the very first trade you take. However, usually you need to make one phase, or you may need to make a certain percentage in order to get that first payout. And once you have that payout, it then becomes a different game where you are going to be funded much more after that first one. In the 5%ers example, you get funded 4 times more soon as you finish the phase one, and then every phase after that, you need 10% more, and it will double your size of account, also double your max loss. Whereas in the 5%ers, for most of them, it's make 6% before losing 4. If you do get that $800 one like we had, it is 7% before losing 4. But if in the 6% example, those ones are exactly the same parameters, the same needs of a challenge account, just that you get paid immediately while you're doing it. And that's going to be one of the big differences. One other big difference that I've seen is that usually with these instant funding accounts, you're not going to get a refund on your money. For most of them, there are some exceptions, but because you're instantly funded, it pretty much makes up for that right away, because you pretty much get your refund back as soon as you hit the first target.
Like Blake was saying, yes, they are essentially the same, only in one phase, and you get the payout. But the best advantage, in my opinion, which helps tremendously the psychology, and psychology is one of the most important pillars to be a profitable trader, is the fact that you don't have a limit to hit the target. So if you have that off of your head, of you don't need to think about that, then it's obviously way better for you in terms of psychology on trying to hit that target, and you will probably end up hitting more targets using this type of challenge compared to a normal challenge where you have a time limit, and when the time goes by and you have a few days left, 10 days, 5 days, your psychology is going to go out of the roof and you're going to do bad decisions basically.
So going off of that, one thing that came to my mind is which one is better for how long you plan on trading with a particular firm. So obviously, if you plan on trading only for 7%, only for a certain small percentage, which one's going to be better for you? Well, of course, that the instant funding fast scaling prop firm is going to be better for you in the very, very short run, because they give you that instant funding. They'll actually give you money back when on your first on your first initial stage, which is going to be some that challenges for the most part don't. And even if they do, it's going to be around 1 or 2% of your total gains, while instant fundings usually have around a 50%. Now, some people look at that 50% and they compare it to the challenges, which have 70, 75, 80, even 85 I've seen with some of the challenge prop firms. And they think, wow, 50%, that doesn't seem very good. Well, it's really not the same thing. It's not really comparing apples to apples, because the 50% is instant funding. I know I keep on saying that, or keep on reiterating it, but that's really the biggest difference. And it also fast scales, so you'll have a bigger account in the super long run as well. So actually, in the short term, which one is better? It's obviously going to be the fast scaling one. It's going to be better in the short run. But once you have enough trades where you would have completed a challenge account, and you also would have received a first payout, well, then the challenge account is going to be more beneficial for you at that time, because it's going to be a larger account, larger payout, and for the medium amount of time, the challenge account is going to be better for the same percentage gains versus the same percentage losses. However, in the ultra long time frame, because the fast scaling aspect of these prop firms, if you really are an amazing trader and you're able to get a million% or whatever, you're able to get an amazing amount of gains on your account. But due to the fast scaling nature, as long as the cap is relatively high, until you reach that cap, it's way better. Eventually, going to be way better to be trading with the fast scaling one. So it's kind of this interesting dynamic where if you plan on trading for an extremely short amount of time, you need money very quick, fast scaling is better. If you plan on trading for a medium amount of time, then the challenge is going to pay you more money. But if you plan on trading with a particular firm in a particular account for an extremely long time, then it goes back to being in the favor of the instant funding, fast scaling prop firms like the 5%ers.
I want to mention about this the fact that if you are not strong psychologically speaking in terms of trading yet, but still you are a good analyst and you want to make some bucks because of course you have been trying for a long time maybe, and you want to feel what it is to be like to be a trader and receive your payout, then maybe a fast scaling plan for you is going to suit you better, since you don't have that pressure, like I mentioned earlier, of the time, and it's going to eventually pay you out, because if you don't have that pressure, you will probably hit the target. There is a much higher probability, and if you're not strong psychologically speaking, then this is probably the best option for you.
One of the biggest criticisms that I hear about these fast scaling instant funding prop firms is that it would be better just to have a high leverage broker account with no prop firm in comparison to be with these particular fast scaling prop firms. This is going to be not actually accurate, and we can show you why. All right, so now we're going to be talking about what it looks like if you're risking 1% per trade and having a 5 pip stop loss as a scalper. Again, this is very specific to this specific type of trading strategy, and it's going to be comparing a high leverage account on the left side of each of these two areas, and it's going to be the 5%ers account on the right side. The max drawdown in this first section, and it's going to be the gain per stage in the second section, and this O and over here is the percentage gain for each of the new increments on account provided for both. Of course, if you have a high leverage max drawdown account, this is going to be increasing more. We'll be talking about that. It's going to be based off the particular trading strategy. So let's go ahead and start off by Smart Money Source explaining how you get from this amount of money to this amount of money. That's not just a 7% increase. Can we hear about that?
So basically, assuming that you always risk 5 pips on every trade that you take as a scalper, obviously having an unlimited leverage, it will allow you to risk at least 1% every time you have a 5 pip stop loss. Whereas on 5%ers, if you have a 5 pip stop loss, you can't risk 1% since the leverage is way smaller. So in this case, to compare both of them, it's fair to say that for a 5 pip stop loss scalper using an unlimited leverage account, it will make 4 times the gain that it would make on a 5%ers account. So basically, instead of hitting 7%, it will hit 28% in the case of the high leverage account, and in the case for a 10%, it would hit 40% gain on a high leverage account, using always 5 pips stop loss in this example.
Exactly. Or just to reiterate, in other words, essentially the reason why we're going to have a higher percentage gain on the left side than the right is because you have that more leverage, you have a little more freedom since there's no additional rules on your particular account. And so it would be fair to say that in the time that it would take you on the trades that it would take you to make 7% gain on the 5%ers account, it would you would make the same, but 4 times more if you're trading a normal account. But again, you don't get that larger account size. That's going to be a really, really big key difference on this. So just to confirm our math here, I'm going to go ahead and say this cell times 1.28, it's going to be 28% gain on account, and it should be this number here. And as we can see, that is the case because your drawdown amount is going to be your total size of account. Unlike the 5%ers on here, your max drawdown is not going to be your total size of account. It's only going to be a fraction, or usually 4% of the account size. So that's going to be the big difference between these two. Why these numbers increase so much faster than these ones is because you have such a larger account that they give you in the first place. And also, of course, they multiply your account size by 4 once you complete the first 7% profit target stage. So now let's go ahead and go down the list just really briefly, and I'll show you guys again from this one to this one. As Smart Money Source said, we're going to give it a 40% profit again. So let's go ahead and do that math just to confirm we did this accurately. And as you can see, it's going to be the same number there as well. So now so all these are going to be the max total account size that you'd have if you gained a total of this many percentage gain. So if you look at this really carefully, you'd be seeing that this is a 57% gain in total on account. But of course, by using higher leverage and everything, and you'd make a little more if you had a normal high leverage account. Then you'd actually go from an $875 account, which could be the cost for the 5%ers, up to over a 4K account. But if you were using the 5%ers account, as you can see, the gain per stages, the last one in particular, is way, way more than anything you'd make even if you add up all these ones together. So the gain per stage on any of these given stages is always going to be in your favor to use the prop firm versus not using the prop firm for any given stage. As you can see, especially towards the end, it's going to be better for you until many percentage later, because the 5ers does limit you. not to be too restricting, but they limit you to over $1 million of a funded account. So if you think that's limiting, what you can always do is you can collect this money and then fund your own personal account after you've been trading this for a long time. But eventually, in the super, super, super ultra long term, of course, it would be better to have a normal account, but that would have to take you many, many years at the equivalent ratings compared to the 5%ers, which you'd already have the 60 number. You'd have that, it just be repeating after this. You'd just be making 60K every single 10% for an extremely long time. I'm not complaining if I make that. I don't think anyone would either. It's an amazing possibility. So let's go ahead and look at what it would look like if you had a 15 pip stop loss. And we're going to be talking about this much more briefly in comparison. So smart money source, how come the gains on here are going to be less for the high leverage account if you have a larger stop loss in comparison to a larger gain?
Okay, using the same calculation in this case, given the fact that you use always 15 pip stop loss and 1% risk per trade, on 5%ers, you are limited to the leverage again. You wouldn't be able still with a 15 pip stop loss, you are still not able to risk 1%. So on a high leverage account, you will make 1.33% more, basically 33% more than the normal target for the 5%. For example, for the 10% stage, it will be 13.3% gain compared to the 5%ers, which is 10%. Obviously, since the stop loss is bigger, it's not like the scalper, the difference is smaller, but there is still a difference. So in order to risk 1%, you will still need to have a bigger stop loss as your normal stop loss.
So in other words, just to reiterate what Smart Money Source is saying, that it's you can use a more accurate ideal amount of leverage with the 5%ers if you have a larger stop loss. And so because of that, it's not realistic to make as much extra on your account more than the percentage gains with a high leverage account, provided you're risking 1% on both accounts. So in conclusion, we've discovered that it's way better to use a prop firm over a not prop firm with a normal account, but is a fast scaling instant funding prop firm better than a challenge account? What's your opinion, Smart Money Source?
Well, in terms of, like I mentioned earlier, in terms of psychology, if you are still lacking of a strong mindset for being a profitable trader, but you still want to make some money because you're a good analyst, then go for the fast scaling prop firm, because definitely it will help you in terms of psychology. Otherwise, in other cases, if you're good on trading, if you're a good trader already in terms of psychology and analysis, maybe it's better to do a normal challenge.
Gotcha. Well, thanks so much for having you on. I appreciate your advice with the Excel document, as well as your help with passing the 5%ers account that we're doing. Looking forward to having you on maybe once we complete level 2.
Okay, thank you, Ray. Thank you for having me, and we'll see you all guys next time.
Thanks so much for making it to the end of the video. I really, really appreciate it. Don't forget to smash like if you enjoyed it and you got any value out of it. Also, a huge thank you to Smart Money Source. Be sure to check him out. Link in the description below. Another link in the description below is also going to be for that 10% instant refund, so be sure to check that out as well. It's going to be for the 5%ers. There's also a lot of other really good fast scaling instant funding prop firms out there, so be sure to make sure you're making the right decision. I recommend looking into all of them. I also made a top 7 best prop firms video, which you can find right here. Thanks so much for watching, and I'll see you guys in the next video.